Hello, everyone. Hope everyone's doing fine. Today, we're going to do the weekly analysis on Bitcoin and gold. I hope every one of you is having a nice weekend. Thanks for joining. We're going to see what is the week ahead of us, what is going to bring, what are the possible scenarios for Bitcoin and gold, which are my two specialties. I'm really happy to share this with you guys on a weekly basis. So if you have anything you want to ask me, if you have any comment, please make sure to leave your comment, and I will go through them as we go on the stream. All right. So let's start. Let me share my screen pretty quickly. Let's start with which are the fundamentals that will take place that will hit crypto. As we can see, the only things that we have for this week is on Wednesday. We have FOMC meeting minutes, which is not as high impact. So we are pretty clear on fundamental events happening on crypto for this week. All right. So let's check what's happening for gold. Okay. So we have gold. This is, let me change the time zone so you can have it UTC. All right, so we have 6 p.m. US FOMC meeting minutes hitting the markets on gold at 6 p.m. on Wednesday. Then on Thursday, we have 12:30 p.m. US unemployment claims, which is an important metric for the Fed, for inflation as well. Let's check how is the graph going on for this. Okay. All right, so the forecast is 221K. The previous was 222K, so it's been declining a bit. Normally, for this, the U.S. unemployment claims, if we have like higher than expected forecast in actual, is going to be bad for gold. Okay, as well as at 1:45 p.m. on Thursday, U.S. flash manufacturing PMI and U.S. flash services PMI. So I don't think FOMC meeting minutes will bring much volatility, to be honest, but we might rather have more volatility with unemployment claims, depending on how DXY is going to react to this news, right? Yeah, so we have meeting minutes, unemployment claims. I use different ones, like you see, Cryptocraft, Metals Mine, and Forex Factory, normally because I want to make sure that the news that Forex Factory is telling me will affect crypto or not. Okay, it's pretty important. Now, if we have something related to war, if we have something related to some exchange, a hack, or something that is out of like a scheduled news, it will indeed impact the market, but it's impossible to know that, right? So let's go ahead and check our charts. Let's start with Bitcoin. I have erased all of my drawings here. Let's start with the daily chart. Let's go to the weekly so we can find the weekly volume levels. Let me turn this off and also this so we can have a clear chart over here. Let me expand this. Let's put it to 100 and let's go. All right, so let's find the volume levels for the weekly chart, which is basically the macro volume levels. What I normally look for is for the low volume nodes for my support on the resistance levels, right? And these volume nodes normally are aligned with liquidity gaps or candle closures, right? These are very important to know. So we have, let me see if I can put this a bit bigger. Okay. So as you can see, this level is a liquidity gap over here, which is aligned with a low volume node. This could be the top of this high volume node formation. As you can see, something like this. We also have like a low volume node over here, which we can highlight, but let me check. So this low volume node might be confluent with this level over here. No. It's confluent with the previous all-time high section. I'm gonna put it all right? But I'm not gonna highlight that level because it's not as recent as this one's, right? So if I go, let me erase this. If I only take into consideration the recent price action, you're going to notice a change on the volume profile. See? So all of this is the high volume node. So I'm highlighting the high volume node extreme high volume node extreme low, right? This is what composes the current range we are dealing with. Okay. Yep. That's why I didn't want to put this confluence over here because it's way too old to take into consideration. We have new price action now. So yeah, we have these levels over here. We have another low volume node over here, which is the low of the volume gap. I would like to make a volume level zone over here to highlight this point of control. Next, low volume node extreme over here, liquidity gap low, so we have that. Next would be around here. We have another liquidity gap over here. I think we're good with that. I don't think we need more than that, to be honest. So all of these levels, I'm going to pass them into our daily chart so we can have a better look at them, right? So let's go to the daily, have this. All right, we can perfectly and clearly see the price structure, right? So currently we are on a high volume node of the weekly chart, which is highlighting all of this range formation between 71K to 180 and 59K. Okay, I normally like to round up these numbers as psychological levels as well, which has worked for me very well. I don't let them as they are. 51,700, and we also have here 43K 880, and this last support over here 38K 400, right? So it's not exact, as you may see. It's not exact, right? But we also have to look for possible trend lines, you know. So we have a trend line over here. Okay, normally trend lines are zones as well, right? They are not exact. Let me show you how you guys can actually do this to support this trend line. You know, like as soon as we hit this zone over here, it might hit the trend line. All right. So let me check if I have a tool for this. Parallel channel possibly. Yeah, perfect. All right. So we have that. And what you can do is to highlight all of this parallel channel. You put the trend line where the middle of the channel is, and you will have like a perfect trend line that will interact either if price is going above the zone or below the zone, right? Now, if I raise this, you have perfect trend line over there. Okay, have that trend line, which is important. If Bitcoin is going to break out above this trend line and 71K, then we most likely going to see higher prices. To know higher prices, I'm going to use my algorithm to see which are the monthly volume levels that we can highlight if Bitcoin is going higher. So we have 77K and 82,800. 82,800. Perfect. So now we have that. We have our price has never been here before, but I'm pretty sure that the prices are going to react to these levels. As many times I have shown you guys that my algorithm works pretty well with support and resistance levels. Okay, so that would be for the daily chart. Now I'm going to look out. Okay, so I recently shared a fractal on Bitcoin on my Twitter. If you guys don't follow me, go follow me on Twitter. Is that Bast Labs. Okay. As you can see here, I wanted to show you this. Okay, so we were on a bull trend here, right? The monthly rolling VWAP is highlighting the bull trend. Price is above the rolling VWAP, right? Then we have a deeper pullback. Price goes below the VWAP, consolidates a little bit below the VWAP, and then breaks out and starts the next leg up, right? So we're having kind of the similar scenario right now because bull run, price above the VWAP, deeper pullback, deeper pullback below the VWAP, consolidation below the VWAP, breakout, right? This breakout has been a bit more aggressive, right? But it's right now it's not having like continuation, which is weird. But the market structure remains bullish. This was the last higher high made. Why I take only this in consideration? Because all of these movements over here and here are just failed actions above the previous higher high. To have a new higher high, we need 2 candle closures above this level. And if I take out the candle colors for high relative volume, we are going to have that this was the previous lower low. Okay, so we didn't have a new lower low because this is a failed action. As you can, if I zoom in, you're going to see that this candle over here closed below the previous lower low, and then the next candle recovered that level. Right, so that's a failed swing, that's a failed action, whatever you guys want to call it. That's a market structure. So the market structure remains bullish, and is bullish while the price is consolidating, which is extremely bullish for the long term, right? This is extremely bullish for the long term, as long as Bitcoin don't go below 59K. If we go below 59K, then you can expect lower prices like 53, 51, 43. It depends on the market structure. Really is king when you want to analyze price. Okay. So let's look for the volume levels for the intraday charts. All right. So we have a low volume node over here that I'm going to highlight, possibly with a zone. This. We have another low volume node here, which is aligned with this liquidity gap. As you can see, if I highlight this low of this candle and the high of this candle, we have a liquidity gap over here, which also aligns with the low volume node. But I'm just going to leave it with this one over here, which we haven't interacted with yet. Okay, that's kind of weird. And then we have another low volume node that is acting, that is aligned with this here candle closures of 2 days, 2 consecutive days where we have the open and close, or the close and the open aligned with each other, are really important for order flow orders. All right. Then we have, this one, maybe this one, the extreme of this high volume node, right? Then we have this one over here, which is this liquidity gap. And then we have this one over here, which is also aligned with this low volume node. Okay, so I'm going to pass all of these levels into the intraday chart. Boom. Now we have our daily chart, we have our bias. The rolling VWAP is turning bullish. Right? This doesn't mean that we can have a pullback here. Fill this liquidity gap on the daily chart and then continue higher. Right? That's what the chart is telling me right now. We are in the middle of the high volume node. Price can be erratic here because we are basically on a fair value price, okay, fair value area. And price can just rumble around here for as long as it wants until we have imbalance in the fundamentals in the price of an asset. That's when you normally see breakouts on either direction. All right. So let's go to the intraday chart, intraweek, sorry. Let's go to the intraweek chart in Bitcoin. We have our volume node, our volume zone here. From the daily chart, we have our levels. I'm going to round up these levels. This one is perfect. This one, 30. This one is 30 as well. This one is 600. 60K, 800, and the last one to round up, 57, 590, and this one over here, 54K, 960. All right, okay. So now we have our chart. Let's take a look at the market structure on the 1 hour chart. This was the previous higher high, and this means that it was the previous higher low, okay. Let me just make sure that this only appears on the hourlies. Okay, so we have failed action over here, as you guys can see. price was unable to make a new higher high, and now possibly we are declining towards this area. Okay, this area is going to be very important. If we bounce from here, we're most likely going to see 67K. All right, since the price, the 1 hour chart is bullish, is following the daily chart. All right, so that's important. That's something to take into consideration when looking for trades. Okay. We have the weekly rolling VWAP is highlighting bullish price action. All right. So as long as we stay above this, the bullish sentiment continues. If we go below this, then the bullish sentiment will not continue. All right. I use basically rolling VWAPs for that. It's not that I'm going to follow VWAPs over market structure, right? Because market structure is most important, but it highlights the sentiment. It highlights the volume, it highlights the price direction, and it's a nice confluence to have in your chart. Okay. Now let's look for the CBD on the intraday chart, which is also important. Okay, so if I zoom in on CBD, if I zoom in on the CBD, all right, we are seeing how CBD is making higher highs. All right, price is also making higher highs, as we can see here. All right, price is also making higher highs, but we are having an absorption divergence here, because price, even though it went higher, we had a failed action over here, while the CBD made a new higher high with high relative, with high cumulative volume delta, with high volume delta, meaning that a lot of traders, long traders, got trapped here, right? Where are these traders' stop losses? That's what we need to think about. We have stop losses here, stop losses here, stop losses here, stop losses here. Okay, so what we most likely see during the week, something like this. Okay, that's the scenario I'm looking out for on Bitcoin. It would be nice that if we just wick below this level and remain with the bullish market structure, this way the trade is going to be way easier than if market structure shifts to bearish, and then we need to wait for the market structure to turn bullish again. Otherwise, if the market structure just, let's say, shifts closing below this level, continues to decline, gives a bounce, because a lot of traders are going to long here, but the market structure doesn't shift again, then we most likely continue to decline to fill all of this gap. Okay, so make sure to know this. Why I'm letting you know, guys, that we need to look out for the stops of like where most of the stuff might be located, not because some evil entity is going to look out for these stops, you know, but because the market looks out for where liquidity is, right? The markets move towards liquidity, and the stop orders and limit orders are liquidity on the order book. So if there's liquidity in a certain place, make sure to try to notice it, and you are going to have a better bias on the price. All right. So as you can see, we are having an absorption divergence. Price tried to make a higher high, it wasn't able. CPD make a higher high with high volume delta, meaning a lot of traders got trapped on this attempt to break out on the weekend, and then we are declining. All right. So let me erase this. We can look out for the intraday levels right now. Intraday levels are not as relevant as these ones, but they help sometimes to know how price is going to react in certain areas. Low volume node here, liquidity gap not filled yet. We have here liquidity gap, low volume node. We also have here candle closures, high volume node stream, right? Other low volume node over here, confluent with these candle closures. Then we have another low volume node over here, possibly. Yeah, we have another one here, which is, yeah, we can put it over there. Liquidity gap. And another one here, we don't have anything here. We don't have candle closure, so it's not valid. And then liquidity gap over here, right? So I'm going to move all of these levels towards the intraday chart. I suggest doing this, like if you're going to look for the intraday levels, do this on every session, like New York, London, Asian, right? I only trade New York, so I only do it once a day, okay? For the intra-week levels, you do it daily, right? So every candle closure, you need to update the intra-week levels, these ones. And for the weekly and the major levels, you do it once a week, once the weekly candle closes, right? So, the intraday levels. Let's go for the intraday chart. We have our levels here. This is supposed to only appear on the hourly chart. All right. That's the market structure right now. On the intraday chart, this was the previous higher low. It seems that we have two candle closures above it, so we had a market structure shift. The price is not bullish. This is the new higher high, and this is the new higher low. Right. So the market structure on the intraday chart is bullish at the moment. Make sure to know that. I'm not going to trade from this. You can trade from this chart. Basically what I do is I trade the direction of the daily, okay, but I use the hourly to place the trades so I can have a better risk reward. I use the 1 hour, that's same as the daily, but with the 10-minute chart. So I trade the direction of the hourly chart on the 10-minute, okay? And you can basically do exactly the same on the 10-minute chart with the 1-minute chart. You trade the 10-minute direction on the 1 minute, and I'm pretty sure you're going to have big results on that. That's how I've been pushing my accounts up, only using two time frames as reference. That's really useful. It's not confusing at all. You don't have to go like, oh, the weekly is heading this direction, the daily is heading this direction, the 4 hours heading this direction. Like, I know there are traders that are profitable looking at 10 time frames at a time, but I try to simplify things and I only take decisions based on 2 time frames at each time. So this way, I can swing trade, I can intraday trade, and I can scalp. And I can hedge my positions. I can go long and short at the same time on the same instrument. That's the way I have done it. All right. The CVD on the intraday chart showing a big decline from cumulative volume delta, a lot of shorting. We might have a push towards. If this bearish pressure is going to continue, we might head towards 65k, 700. All right, but the 10-minute chart is irrelevant as long as the hourly chart is not letting us know something. Okay, this is the chart that will decide what we're going to do in this chart, and this is the chart that is going to decide what we're going to do in this chart. Okay, so in terms of like where the market can be headed, we have a lot of liquidity below these levels, right? Perfect higher lows formation. That's not good, especially because the market is not perfect. So normally when we see this is because we might have a lot of liquidity below these levels that might be taken anytime soon. So better be careful of this level. If the market is going to break market structure to the downside, do something like this and boom, take these levels and then continue to the upside. Because if we are going, if we take this confluence, the daily chart, we have big gap here to fill, right? We have one there, and if we see farther, we have one here. These gaps for a sustainable upward trend, these gaps needs to be filled. All right, at least this one. We are not going to fill all the gaps every time, but you need them to take this as confluences to know where my price be headed. All right. We also have gap over here on the upside, right? That needs to be filled. So these are, if you are like a zone trader, right? These are interesting zones that you might need to take into consideration to only interact with the market. If we go here, reject this, short this, if we go here, reject this, long this. If we continue here, retest, short towards this level with the intraday chart, if we reject this, long, and so on, right? So liquidity gaps are pretty useful when looking at the bias, even though I don't use them as bias, but I use them as confluence with the bias, right? We are bullish right now. It doesn't mean that we can pull back towards this level, try to fill this gap, and then continue to the upside. That's as confluence. So I think that would be for the Bitcoin chart. If you guys have any questions, please just let me know. Now let's head towards gold. Let me open my gold chart. Okay. I don't know if trading view. No, they didn't. Right. Awesome. I normally use this chart. Okay, so gold is open now. The forex market is live now, and now we have our gold chart on the weekly. We have this resistance over here, which is aligned with this volume gap. There. Yeah, I'm not going to put that. Anyway, we have these kind of closures over here, which is also aligned with the liquidity gap on the weekly chart of gold. We have all of these low volume node that basically takes us to this liquidity gap over here, possible zone to take into consideration. Okay, now we have this perfect aligned with low volume node. Then we have we can use this better. Okay, we have another zone over here. This. Okay, now I'm going to pass all of these towards daily chart. Let's go to the daily. And we have our volume levels. As you can see, guys, it's really easy to find these volume levels. But they're really helpful because you're using price action in confluence with volume, and this will help you to find better zones of reaction, because that's what we are looking for, right? Zones of reaction in which the market can react on a certain level, so we can look for directional setups, right? All of these, if you know about the auction market theory, low volume nodes, high volume nodes, high volume nodes, low volume nodes, and so on, right? If you study a bit more about that, I won't get in detail right now on that. Okay, so in terms of the gold chart, the daily chart is bullish. No, well, we have this was the preview lower high. This was the preview lower low. Okay, failed action, and we are possibly going to see either a shift in market structure to continue higher, right, or a failed action here that will allow us to short gold. Okay, we need to wait because this is the daily chart. So every day we have a new candle closure, and that's what going to give us the signal on either if we need to short or long. All right, for now the bias is to, well, my bias would not be to go long here because we're basically on a daily resistance. I'd rather wait for confirmation on this breakout, retest, and continuation, other than trying to long the resistance that might trap us and give us a failed action that we need to short towards the range lows once again, since the market structure remains bearish. But the sentiment is bullish. Why the sentiment is bullish? Because as we can see, the rolling VWAP remains bullish. It's still showing a bullish sentiment. So this is why we need to be careful here. But don't long on resistance, guys. I'm pretty sure that this is going to save you many times soon. If you look at resistance on a higher time frame, don't long it on the lower time frames, please, because this is the easiest way to get trapped. Literally, easiest way to get trapped. If you long on a daily resistance, or if you short the daily support in your lower time frame charts, it's very likely that you're going to get trapped, right? So wait for confirmation. That's the best way. Since we're not having any daily setup, then we can trade the hourly with the lower time frames, right? So this way we can scalp the market until we have a swing setup, and this way we can trade in different ways, right? We have this low volume node over here. This is useful as well. We have this low volume node extreme. this might be interesting. We have this low volume node stream aligned with these candles over here, but as you can see, we have a big movement, like high volume node here. Let me just zoom in a bit. I want to see if I can. I'm going to put this as support as well. Okay, this is a high volume control. All right. I'm not going to take that into consideration for taking trades, but it's going to be useful because price is going to definitely react to it if it comes down. Right. We have another low volume node over here. It's aligned with this candle closures here. Yep, nice levels. Then we have a new liquidity gap here, very little one. Okay, so that might be the ones that I need to take into consideration. This one, this one, and this one. Let's go to the intraday chart. Okay, so we have now these are the structural level for the daily chart, so we don't want it on the hourly. Okay, and now we turn on the algorithm to see where are the next resistance targets for gold, as we don't have price data over there. We don't have price data over there, so we need to use the algorithm to know where price might be headed. I also round up these numbers, by the way, guys. Okay. Now, it's easy. We need to wait for an interaction with either this level over here or pull back towards this level, rejection, continue higher, or deeper pullback, take these lows, shift market structure, then go long, right? Let's see at the market structure on gold. Let me take this out. The last higher high was this one over here. Basically, this is the last higher high, and this is the last higher low. All right, this is how you micromanage market structure. And we want this on the daily chart, on the hourly, sorry. We also have the market structure on the daily. Okay. So we're bullish, right? It would be nice to see something like pullback, failed action, continuation to the upside, right? That's confluence. That's what we're looking for. We're kind of seeing divergence on the CBD. As you can see, this high on the CBD is not like the price is not higher than this. Price is higher than CBD, sorry. So this is not absorption, this is exhaustion, meaning that there's not enough market orders that are entering the markets right now, showing us that we might have a pullback anytime soon. And we need to take advantage of that pullback because price structure is nice. As I told you guys, don't long at resistance, daily resistance over here, but we could long here and target this highs over here with some take profits on the way up on the intraday chart. All right. Otherwise, we shift market structure, retrace, pull back towards this level, and then continue lower. So we can short this, shift on market structure, we can long this. So as you can see, you have many options to take trades on the incoming week for both gold and Bitcoin. Okay. I will share my charts tomorrow before the New York trading session on the Discord, on my channel on Discord with the Perf Nest. All right, so make sure to subscribe, make sure to enter so you can see all of my intraday setups. If I'm going to see any call, if I'm going to see any setup, then I'm pretty sure I'm going to share it on my channel and on official calls on the Perf Nest. So if you don't want to miss my intraday calls, my swing calls, then I suggest you sign up for the Perf Nest. Right. So we have one question over here. Bro, what's the indicator on the right side called? I think that you mean the BRVP, which is the visible range volume profile, the one that is highlighting the volume profile on the right side. It's a built-in indicator on TradingView, so it doesn't have any like special configuration other than the colors that I give it. So I can show you right now the configuration that I use. I don't mind. On inputs, number of rows I put on row size 610, Fibonacci golden number. Total volume, I don't want to see up, down, neither delta. And value area, I don't use value area here because, as you can see, I don't mind where is the value area high or value area low, since I'm micro managing the volume profile into several segments, into low volume nodes and high volume nodes, right? The style, all gray, all black, 20%, all black, 20%. This down volume and value area down are irrelevant because we are not using the value area volume. And value area high, value area low, POC, developing POC, developing value area, it's unchecked, and then you might have something similar to this, right? So I think that would be all for today, guys. I'm pretty open to questions. If you guys have any other questions, please let me know. Make sure to follow me, guys, on Twitter if you want to see my updates constantly. If you want to see more private updates that I only share inside the BirdNest Discord, make sure to sign up for it. All of the links are on the description, so make sure to sign up, guys. I'm going to leave to have a nice weekend, literally. I hope you guys have a nice day, and I hope you guys enjoy this pretty quick introduction to what I do. All right. Thank you, guys. Have a nice one.